Welcome back to Energy Explained, the family YouTube channel and podcast where we take stories from the headlines in the energy world and we distill them down. And I do that here with my father, Vikram Rao. He comes to us courtesy of the Stanford engineering program. He holds a PhD in engineering. He also was the chief technology officer of Halliburton. He sits on the board of energy companies. And so he speaks with authority on both the science of energy and the business of energy. And today we're really going to dig in more into that topic on the business of energy. So last week we talked about the Exxon board fight and how activists, investors got 2 board seats for, quote, independent board members that are really supposed to guide ExxonMobil to ventures that are more forward-looking and more into green energy than they had previously planned. The New York Times subsequently wrote a story which said this is more than that one board fight. This is a movement that investors are demanding companies broaden their portfolio and bring in major investments around the broader space of, let's say, green energy. But let's dig into that. First, I'll ask you, is this a movement? Are you feeling that? You're plugged into the industry. Are you feeling this idea that it's this Exxon thing was a huge deal? Is it? But if you had on the spectrum of one-off to movement, where do you sort of sit right now?
Yeah, that's a good question. I would say, if this had happened 3 years ago, I would have said it's a one-off.
Okay.
What's been happening recently, and I expect to continue to happen, is that the climate has changed, the technology climate has changed to where things are much more feasible. And we'll get into it. In fact, we may have to get a little deeper into technical stuff to give the listeners a true feeling of why I feel that way. But I would say that I'm well versed in these things, and I might even risk using the word tipping point.
Oh, wow.
Yeah, I don't like phrases like that because they're overused, but we might be close to a tipping point on capture cost, okay, on the cost to capture CO2. Now, there's a whole lot of stuff. Once you capture it, you got to do something with it. Got it, okay. And each industry is a bit different in as much as how much does the capturing per se make a difference on their greenness. But having with all those caveats, I would say that these investor groups, Vanguard, BlackRock, and so forth, who've seemingly put their faith into the possibility that companies can go greener as well as continue to make profits, is more real now than it used to be.
Okay, so let's ask you a higher level question first. So when you think about tipping points and we look at industry landscapes, they happen in a couple ways. One way is that the incumbent firms are not really part of the equation 10, 20 years on. I'll give you an example. They're around, but they're not. So for example, in handsets that you use, cell phones, right? Biggest manufacturers in the 90s, Motorola, Nokia. Biggest manufacturers today, Samsung, Apple, right? Why? Smartphone revolution happened. Samsung and Apple at the forefront of it. Motorola, Nokia, not so much. They're lagging behind. Now they're still in the market, but they're no longer the market leaders. Do you see what we're seeing now in terms of carbon capture, in terms of this tipping point? Do you see the incumbent big energy firms as the leaders, or do you see startups? Do you see upstarts as the leaders right now, technologically speaking?
Yeah, I would say both. And to dig into that, let's look at the 2 buckets by which companies can go green. One bucket is where you basically change the process. Okay.
Yeah.
The change the process bucket is one of the likely ones for upstarts. An excellent example is electric vehicles. Electric vehicles change the process. You go away from burning hydrocarbons for motive power to using electricity. And Tesla jumped in, is arguably the leader,
Right.
and they came out of nowhere. Okay, so
Right.
and also some of the key enablers for that are battery companies, and they could be upstarts as well, because
Right.
General Motors is not a battery company. Okay,
Yeah.
and doesn't strive to be one. So so the areas where the process changes is the best likelihood that there be a change in the lineup, if you will.
Okay. Okay. Fair enough.
Yeah. So that's one. The other bucket is where the process remains essentially the same, but you capture the CO2 and put it away.
Yeah.
In that case, the original folks will probably continue to be the operators of the capture, but almost certainly the technology for said capture would be provided by probably upstarts.
Okay.
So, and that the way it'll shake out, and I'm thinking about where it's happening in a couple of places. The way it'll shake out is the upstarts will be what will be the service company, and the original people will be the operators, if you will. So in oil and gas, for example, the people who own the oil assets are called operators, but all the real work is done to drill and so forth is done by service companies. So that sort of model would probably
Gotcha.
happen here. Yeah.
Now, we talked about carbon capture, and we talked a little about the business side of it. And the business side of it requires carbon taxes or caps, right? If you're capped, or if there's a tax on production, it means you'll pay to reduce your output. If there's not, you won't. I mean, you could if you were altruistic, but we've talked about it, depending on the altruism of firms, is not a long run good bet for change. So when you say tipping point, is it because your belief that at the current, for example, in Europe, carbon tax or free market trading value of a ton of carbon are now, it's going to be the case that, hey, capture is below planting trees, capture is below every other technology out there, and therefore all of the big ones will say we can just keep producing natural gas power plants, for example, and capture, instead of having to worry about alternative energy as much as we thought we would have, hey, say 10 years ago. Is that what you're saying?
Exactly. In fact, the last statement you made puts a finger on one of the issues that an extreme left would take, which is that if you can do capture economically relative to the carbon price, then industry is emboldened to keep on doing what they're doing and will not try to change the process. Okay, so that's one of the point counterpoints. But I personally think that the problem is serious enough the problem of global warming is serious enough that we have to use an all of the above method.
Right.
And that I think we should change the process when we can, but that these should go in parallel, and eventually the best man wins, so to speak, to the extent that anyone wins. They may stay in parallel for a long time. So yes, and going back to your premise, exactly right. Europe has got more firm regulations in this space. They've got a cap and trade system which sets a price on carbon. The last time I looked, and I really haven't looked in the last couple of weeks, but it's probably not changed a whole lot. It was around 45 euros a metric ton of CO2, which is about $53, $55, depending on what the rate is. And at that price, exactly what you said, at that price, we are at a tipping point on capture cost. Capture cost is heading below $40 US dollars a ton, heading well towards 30 by a year or two at the most.
Yeah.
Okay. And so at those numbers, you got headroom for the storage part. Okay. So what do I mean by that? Capturing is not good enough. You can't let it go poof. You got to do something with it to store it.
Right.
It's like the dog chasing the squirrel. What happens? Oh, I've got the squirrel. Now what do I do? Okay.
Yeah.
So getting the squirrel is going to be cost effective. Then the focus is to shift to how do you put it away. But yes, I think we've definitely reached a tipping point on capture. There's work to be done on storage, but some of it's already happening, and that's a whole discussion.
Okay, yeah, and I'm not sure if that squirrel thing is like a metaphor you've ever heard before. I've never heard anyone use that before. So if you're expecting our listeners to know, I don't know about you catch the squirrel, then you got to keep the squirrel. I would imagine both are difficult tasks, to catch a squirrel and to cage a squirrel. But is that a metaphor you use frequently, or is that never used it?
No. Our dog chases squirrels, and I've always wondered what the heck she was going to do once it actually caught it.
Okay. No plan in mind. You were probably the same way. I'm famous at work for making up metaphors all the time on the fly that are completely unnecessary. You're probably the same way. It might have been you on the fly there. So you're saying, look, you capture it, you got to store it. We talked about storing it underground. We talked about ExxonMobil's project in the Houston Ship Channel. What's the most, in this space, you've been really clear. You said, look, when it's changed the process, you actually expect new firms to dominate. Solar, wind, we're seeing that. You talked about how the CEO of ExxonMobil came out and said, look, we don't have a core competency in some of these technologies. It doesn't make sense for us to get in there. On the flip side, capture and storage helps the majors because their traditional means of production can become economical if you have to pay the carbon tax, or ethical if investors are demanding a different approach. We can't predict the future. We might see that. So how do you see that netting out? Do you think that concern from, like you said, what you described as the very far left wing, do you think that's a valid concern, or did you previously said, hey, actually it's let's take all comers here to help this problem?
Yeah, I don't think it's a concern for the all-comers reason, in the sense that we're so behind the 8 ball on carbon mitigation that we have to do it all. Okay, so I don't have any concerns on that. But getting back to your point about competency, yes, as I told you last time, Exxon or Shell getting into solar doesn't make any sense because they don't have core competence in that space. But on carbon capture, they do. Okay, they don't have the process. Upstarts are going to come up with the processes. So so I will tell you this, and we can go deeper into it, but the chemical engineering required to capture carbon economically, we use something, and I'll get in a little bit of jargon, called process intensification. What process intensification is very simple. Most processes have economies of scale. You know that as an economist, okay? In order to get the cost down, you got to be big.
Yeah.
Right? What the chemical engineering has been working on, the chemical engineering people have been working on, is how can you get costs down even for small scale? Okay. To do that, you have to radically change the kinetics of the reaction. So radically changing the kinetics is called process intensification. You make the process more intense. Okay. That is what's going on. That is the single most important technology in reaching the tipping point. Okay. That is allowing carbon to be captured at practically any scale. You don't need giant plants. Okay. That's point one. Point two, and here's the interesting point for the supermajors, not so much for the little independent oil companies, but for the majors and supermajors. The majors and supermajors are all involved in refining. Refining has a core competency in chemical processing. They would easily understand what is involved in this process intensification method that the upstart is bringing to them. They could easily operate it. They had the core competency in that space. They didn't just think of it. That's all the upstart did. Okay, but they will quickly understand it and get high competency and probably go beyond the upstart in understanding. This is why they would be missing a bet if they didn't jump on it, because they have the core competency in this space.
Okay, so how does it work though? I'm just not familiar with the development here. How much co-development happens? Because what you're describing here is that, hey, the super majors, they're all about scaling. They're all about building efficient processes at scale. The upstarts are innovating new techniques. They're really in the lab. They're they're taking wilder bets. There's a sorting process. Now they start making some deals with the supermajors. How much is it the engineers on both sides really co-developing versus buying a finished solution?
No, it's not co-developing. See, take some major operations like liquefied natural gas, okay, moving natural gas in liquid form. Only about 4 or 5, Shell is the leader in it, and only about 3 or 4 others can do it. Take something called converting natural gas into liquids. It needs huge plants, needs great capital and financing, blah, blah, blah. So that means only the big boys can do it. So they kind of stuck to doing what they know to do and what they have the big competency in.
Okay.
Little stuff like process intensification is not something they would have chosen to go to normally. Their engineers wouldn't have.
I see.
But when it's presented to them, they will understand it. That's the point. But
I see.
But so to your question, they would be presented with a finished package.
I see.
But
I see.
They have the inherent competency to even improve it. Yes. Yes.
I see. So what are some of the hottest startups? I mean, you're in the space. What are some of you say it's a tipping point. There's got to be something that you're thinking of that's close. It's really close, like maybe a specific companies or specific technologies that could give us an idea of really what you're on about here.
Yes, there are specific companies. I suppose it doesn't hurt to name names because I'm not advertising. I'm just mentioning it. There's a company in London called Carbon Clean. And by the way, they got financed by some pretty clever people. Part of their financing came from the venture arm of one of the major oil companies. Okay?
I see.
Yes.
I see.
Yes. So
I see.
And so that's another point. I know of at least 3 that I am directly in. I know of at least 3 private equity firms, one of them really large, that believes they can co-invest in green and making money. Okay. So this goes back to the fundamental question you asked. Okay.
Yeah.
So, but I'm here to tell you that private equity believes it can be done and is doing it. Okay. And private equity is financing people like Carbon Clean and many others. Okay.
Yeah.
So it's all coming together where the money to do it is there. So one of them is Breakthrough Energy Ventures, which is originally financed by Bill Gates. Another one is called EV Private Equity in Stavanger, in Norway. Another is called Rhapsody in Boston. And, there are a slew of these who feel, and of course, they're searching for the right opportunities. I'm not saying every one of them is going to meet that guideline, but I'm saying it is not far-fetched. People putting their money down on investment are saying, I think we can do this.
Well, it sounds like that's what when you're saying is a tipping point. Is it akin to solar, where we saw the private money really coming in heavily about 10 years ago, if I'm not incorrect, and then we see now the real change in the market price of solar, whereas prior to 2010, it was government funded. It was really not something you would do if you were interested in making money. It was something you would do if you were interested in it per se, but there was not a rabid investment culture around it. So you're saying with carbon capture, that's the tipping point you're talking about. And then you would expect then, if everyone's right with their projections, you believe the science is real, the investors believe the science is real, clearly they put their money where their mouth is, you would then expect in the next how many years for this to start really impacting the world?
Well, I would say in the next 5 to 10 years, but it'll start within 2. But here's the thing: you made an important point. The upstarts who have invented the processes cannot scale. Mm-hmm. They can't scale to the next extent needed by the world. Okay, so it needs the big folks to walk in and make it scale.
Yeah.
And I'm here to say they should do it. Okay. Yeah. Because it'll be good for them. It will be, they can meet their green targets as well as make money. But yes, for scaling, solar example is a good one. We're going to need major players to step in because major capital we need to truly scale it. But
interesting.
But I think it can get done. But don't forget, we're still talking capture. These folks then have to pay attention to the storage part as well.
Interesting. Well, it does sound like that this ties us back into this Exxon board fight. And we'll talk about it maybe in the next episode, the decision in the Netherlands where I said around Shell and setting targets for them to have serious mitigation of their greenhouse gases, where we say, okay, there's going to be a major role for the supermajors. If there's a major role for them to play, that's also major business to be had. Those two things go together. They're important in the process because they're big producers of energy, and they're big producers of energy that can be cleaned up. But the cleanup scale and the cleanup process is something they know best, right? You said it's sort of staggering to think what you said. There's only 3 or 4 companies in the world that know how to liquefy natural gas, and that can do it. Know how to is one. Can do it is another, I should say. Can do it. You can know how to from a textbook, but can you do it? So interesting. Anything we missed on this topic before we close off?
Yeah, I don't think that we missed anything, but I do want to underline the storage aspect of the CO2.
Okay.
And last time we did discuss Exxon putting it into geologic reservoirs, and that is feasible. But my favorite is what's called mineralization, where the CO2 is reacted with a mineral to form a carbonate. And then it's there for millions of years after that, or thousands, and who's counting after that? Because it's a firm compound that will not dissociate unless under very funny conditions. So mineralization is my favorite, and folks are addressing that, but it's the next hurdle. But I feel very confident that that'll happen. The capture part was the more tricky bit. Because for one, so to begin with, we already have what Exxon and BP and Shell are doing, which is put it in underground reservoirs.
Right.
That already exists. It's not my preferred alternative, but it can be done for $3 to $5 a metric ton or something like that.
Yeah.
Okay.
Yeah.
But my favorite would be mineralization, and I think that's the area of focus.
Well, yeah, no, I think that's, certainly turning it into effectively a rock and digging a hole and tossing the ground sounds like a really ideal solution. Well, look, I thank you for your time today. Thanks everyone for listening. We remind you, you can see if you're on YouTube, in the description below is how to follow us on podcast channels of your choosing. If you're on a podcast, hit follow, hit subscribe. As you know, if you put a comment on the YouTube channel, we respond to it with 100% probability. So we like the engagement, and we continue to appreciate the support. And until then, we'll see you next time.